Hi, I'm Todd Rosenbluth, Head of Research at VettaFi, and thanks for joining us for our latest episode of ETF360. I'm pleased to be joined by David Schassler of VanEck. David, thanks for joining me.
Todd, thank you so much for having us.
It's my pleasure. So before we get into the ETF RAAX, let's just talk about your economic outlook. What's your view?
Our view is that this next regime that we're in right now looks nothing like what we had in the previous decade. We're talking about periods of sustained elevated inflation. That means sustained elevated interest rates, which means what worked really well in the previous decade, given that you had super low interest rates and everything that came along with that, is unlikely going to work, and that we're likely in a new investment regime, right? A new investment regime that benefits savers over spenders, right? Lenders over borrowers. And we think as you transition from one regime to the next, you're going to get a lot of volatility, right? That volatility is going to be driven from uncertainty. As we undergo this structural shift, we'd expect a completely different regime, and that's what we're prepared for, and that's what this fund's all about.
So let's talk about the type of assets that you think are expected to perform best in that kind of regime.
We're talking about inflation-fighting assets. We're not talking about assets that do less bad during a period of high inflation, which is typically where this conversation goes. We're talking about assets that actually do better. That's the focus of the strategy. So what we're doing is we're talking about what assets during a period of high inflation. So let's be specific. Commodity prices. Commodity prices respond to supply-demand imbalances. Print lots of money, limited supply on the commodity side. Expectations should be higher commodity prices. Natural resource equities, companies that benefit from producing, selling, distributing commodities, benefit from higher commodity prices. Their cost rise to everybody else's. Revenue is expected to go up a lot more. You'd expect those companies to outperform. Last but not least, gold bullion. Gold is the ultimate store of value asset. And there's a kicker in there as well. If, in fact, we roll into recession, which we think is the likely path, given the historical precedents for recessions around periods of inflation and the route that we're going on now, if you go into a recession, expectation be more uncertainty.
So David, let's just talk about RAAX, RAAX. Tell me more about the ETF.
Sure. So the Inflation Allocation ETF, ticker RAAX, RAAX, is an active inflation-fighting fund. So really what it does is invest in three core categories of inflation-fighting assets. The first is resource assets, commodities, natural resource equities. The second, financial real assets. We're talking about gold bullion, we're talking about gold equities. And the third, income-generating real assets. Things like REITs, infrastructure, MLPs, assets that are real assets that also generate a yield, which is actually a lot more attractive because now we're in a pretty high yielding environment. So those are major assets that we invest in. The way that we think about the fund is really simple. It solves for three problems. The first, what are the right real assets to own? What are the right inflation fighting assets to own? That's the first part. It's helped solve by that because we did a lot of research into what those assets are, key inflation fighting assets. Second, when do you overweight and underweight each real asset? We have a process that helps us to identify assets that we believe are best positioned to perform in this segment of the real asset recovery. Third, how do you allocate across real assets? We have a process that helps us to maintain strong diversification across these real assets so you can hold it as a core inflation fighting.
So thanks, David. Great to learn more about RAAX. Thanks, everybody, for tuning in to ETF 360. We'll see you next time.